think I just heard your introduction. And what can anybody add to that?
Welcome back. You're watching Buy Now, Sell Now on ET Now, and time to connect with our guests for today. We have Kunal Bothra, who's joining us, as well as we also have Rajesh Agarwal, who's joining us on the show. Good morning to you, Kunal, as well as Rajesh. Thank you so much for joining us on the show. But Kunal, first to you, let's talk about Sensex. It is way below the 54,000 mark. Right now, nudging around 53,600 levels. Where do you see the next level of support or resistance for the benchmark?
So good morning, Cheryl. Good morning, everyone. I think yes, Sensex is now dragged below the 50-day moving average for itself. It was trying to hold up, about the supports of 53,600 on spot level. So we'll have to wait out for possibly the end of day today. If the Sensex closes below the 53,600 levels, we could be expecting the indices to get into a slight corrective mode for themselves. So I think it's a very crucial juncture where both the indices are placed, Nifty at approximately 16,000 mark and Sensex closer to 53,600 levels.
Okay, that's the view coming in on the benchmark indices. But let's move on and start with all the queries that you all have sent us and the BNSN query segment. So let's bring on Rajesh. Firstly, I'm going to come to you. Very good morning to you. And I want to start with the first query in terms of, we have from Abhijit. Now, this one is on Vedanta. Is it a good buy at current levels for a long term? Currently, they own 200 shares. So should they be looking to add more now?
Good morning, Sharon. Vedanta, yes, it's a good buy on fair valuation parameter, and we believe that in the near future, by near future I mean in the next 1 month or 15 days or so, they would be doling out some amount of dividend also. Even the valuation on valuation parameter, it looks cheap considering the fact that it's a diversified company having a whole lot of minerals under its belt, be it zinc, be it copper, be it steel, even crude is with them. So on all parameters, it's good. Valuations is also okay. You can even add to this at this point of time, maybe for a 15 to 20% of move in the next 2 quarters.
Good morning, Rajesh. This is Cheryl. The earlier question was asked to you by Vinny. But let's move on and let's talk, get to this query from Vishal. He's writing to us from Dubai and he's asking between Divi's Laboratories and Tata Chemicals, which is a better counter to invest in at current levels. For the longer term, he's saying, yes, he knows, he's aware they are of diverse sectors, but among both of these, which one do you think makes sense and will benefit Vishal over the longer term?
This is for me?
Yes, Rajesh, this one is for you.
Okay. I think if I have to choose between two of them, I would go with Tata Chemicals, of course, because one, the chemical story is on, they are leading players in caustic, they're expanding like anything. Plus, they are holding in Rallis India, which is doing very well. And on the other side, when I look at Divi's Lab, it's also a diversified, good pharmaceutical company, but then pharma companies have all sort of problems with US FDA coming every now and then. So it's better to be in Tata Chemicals when you have to choose between the two. So I would go with Tata Chemicals.
Okay. Kunal, coming to you for the first query, we have is coming in on TV18. Now, Ajay wants to know your view on TV18. They have 750 shares at 40 rupees. What can we be expecting from this one? Can they add more or should they be selling?
So I would suggest to hold on to the stock, not to add at current levels, because the sell-off which had happened for TV18, I think 2 or 3 months back in the month of April, specifically from 75, 77 levels, the stock had fallen very sharply towards 40, 45 on a in just a matter of trading sessions, and post that we've seen the stock getting into a sell-off mode. So what typically happens is that the stock tends to digest these kind of sell-offs for at least 3 to 6 months. So we'll have to wait out for possibly another couple of months for the stock to consolidate at these levels. Would not suggest to add on fresh quantity at current levels, but I think hold could be a much better prospect for a stock like TV18.
All right, this one is from Arun, and Arun is asking whether he should continue to hold on to JSW Steel. He's already purchased some counters at around 620 rupees per share. He is a long-term investor, so he wants to know whether he should continue to hold on to it or book his losses. What's your take on this one, Rajesh? No doubt is a commodity-driven counter. Surely we'll see these volatile moves based on the global commodity markets. But what should Arun do? Stay put with his holding in JSW Steel?
I totally agree with Cyril that it depends fully on global commodity market, but as far as valuations are concerned, the kind of capacity is had. I think one could continue to the hold after the kind of correction. The valuation had become quite comfortable, I would say, be it JSW Steel, be it Jindal Steel and Power or Tata Steel. Everybody is trading at a 30 to 40% discount from the SP. So I think for a long-term investor, one can definitely hold.
Okay. Kunal, coming in for the next query, and this one is on Rallis India. Tripta has bought Rallis India at a price of around 315 rupees per share. Should she continue to hold or average? What should she be doing here?
I would not suggest to average at current levels. In fact, I would probably expect if the stock rallies up and say if rallies up to 225 odd levels, 225 or 240 approximately as a probably a broader or the upper end of the price rally for itself, that could be a good point where you can look to exit. The chart patterns have been not exciting for rallies over the last 3-4 years as well. The stock has gone into a phase of rally, but then when I look at it from the 2018 highs for itself as well as 2020 lows, the stock has not done exceptionally well. So I think I would probably expect the stock to be an underperformer even going forward. Would suggest an exit, but not at current levels. Wait out for a rally till at least 225 to 40 range.
Okay, this one is coming in from Ravi. He's writing to us from Chennai, and he's saying that he's bought Gokuldas Exports at a price of around 320 rupees per share. He's saying suddenly the stock has fallen below its 200 DMA levels. Is this because of the selling pressure or any other bad news is what he wants to know? But should he hold or sell? Kunal, on the charts, how does Gokuldas Exports look like to you? Does it make sense for Ravi to stay put with this holding?
So I would suggest to hold on. I think the stock is getting into an extreme kind of a sell-off mode. So till last week odd, the stock was holding on to its 200 moving average quite well. Just about yesterday and I think today the stock has seen some selling pressure. So typically after a consolidation, if a stock suddenly sees a gap down, it could probably be an indication that maybe the stock is getting into a extreme sell-off mode. So I would suggest to hold on to the stock at least as of now.
Okay. Rajesh, coming to you for the next one. This query is coming in from Gautam and it's on BEML. They are holding BEML shares at 1,450 rupees. 100 shares is what they are holding. What should they be doing with this one?
This is a hold from our side because all the divisions, be it mining, be it metro coaches or infrastructure, all are doing very well. Even the defense order book is good. Valuation has corrected from 2,000 odd levels to around 1,200 levels. So it's a good buy at this levels, I would say. Somebody holding should continue to hold.
This one is coming in from Bala, and Bala is saying that he's bought Happiest Minds at the levels of 1,090 rupees per share, about 25 shares of Happiest Minds is what he's purchased. He wants to know whether he should continue to hold on to it or exit. What's your take on this one, Kunal? What should he do with his holding in this company?
See, I think if the time horizon is slight short term to slight medium term, then I would suggest to look out to exit the stock. The stock has been a big underperformer. I think the last 6-7 months it's gone through a very sharp correction, halved. I think if I'm not wrong, from 1,500, 1,550 levels, the stock is almost at 800, 820 kind of range for itself. So the reduction in the correction has been quite sharp, intense into the stock price. Possibly the stock can correct some bit more, at least over the short to medium term. So if that's the time horizon, then I would suggest an exit.
Rajesh, coming to you for the next one. This query is from Debi Das and this is about HDFC Life. Now, Debi Das has bought HDFC Life at 547 rupees. Currently is down from 538, down at 538. Should they be looking to average or wait for some more correction coming in on this one? What's the view with a 2 to 3 year perspective on the stock?
See, averaging at this point of time would not be suggested because we think there are some pressure in the entire insurance space as such. After the LIC listing, we have seen every insurance company taking a cut. from the 52-week highs. Even now, the numbers are not that good, so, which can be told to add. One can continue to hold and wait for some spikes or a market being in a good mood to get out of these stocks. Maybe a better NBFC would be a better choice.
All right. The next query that I have is coming in from Abhishek, and he's writing to us from Kerala, and he's saying he's bought Zydus Life at levels of 634 rupees per share. He wants to know whether he should exit or hold on to it, or should he average? What's your take on this one, Kunal?
So I think if you bought at high levels of 600 plus, these are good levels where you can look to average. I would say that probably the entire pharma basket is getting into some bit of a rally or a bounce for itself. So if that's the case, I think stocks like Zydus in Life as well can probably break past about the 200-day moving average as well. So there could be a short-term momentum which you can try and capture into the stock price. I'll suggest to average.
Okay, the next query we have is on VRL Logistics. Rajesh Amrit wants to know the fundamental view coming in on this one. Is it a good time to start investing in this stock for a long term?
Yes, of course, the company is very good, not only in logistics, but they have some fleet of buses also, and they are doing very well. There are some concerns about the fuel cost due to high crude prices and all, but for a long term, it's a good buy.
All right. This next one is from Manika Nandan. He's also writing to us from Kerala, and he's wondering if he could buy KNR Constructions at current levels for the short term, Kunal.
So I think KNR Construction is one of the strongest, I'm not the strongest, but one of the strong performers from the mid-cap space. Right from the last, I think, 2020 lows, if I'm not wrong, the stock was 2 digits, somewhere around 88 or 90 odd rupees. From there, it had rallied up to almost 340 odd rupees. When you look at it from the 2014-15 levels as well, the stock was just about some 10 rupees to 12 rupees. So long-term wise, it's done reasonably well. Now the stock has corrected from 340 odd to 240 odd, where it's currently trading. So I would suggest that if you've already bought, then you should look to hold on. And if you're looking to buy, I think these are good levels where you can look to start chipping in.
Okay. The next query is coming in from the IT space, and Rajesh, this one is on TCS. Now, Varun wants to know whether they can add more TCS to their existing position, which they already hold, and this is for a long-term view.
The numbers TCS gave 2-3 days back were below expectations. I would say margins were under pressure. Although all the geographies did well, all the verticals did well, but margins were under pressure. Attrition rate were on a high. Retention costs was going up. And considering the fact that on valuation parameters, Infosys or Tech Mahindra look better placed than TCS. So I would say if you want to add more or you want to put fresh money, why not go for Infosys or Tech Mahindra rather than going with TCS?
A very tricky, a very interesting question coming your way, Kunal, and this one is from Mr. S. Ghosh, who's a senior citizen writing to us from Delhi, and he watches our show regularly. He's saying that he's holding 800 shares each of HDFC Bank and UPL for quite some time, and he's in the profits for both of these counters, but now he is actually looking to sell. So it looks like he's already made up his mind that he wants to sell these counters, but he wants you to share 2 recommendations, one in the banking space, one maybe in the agrochemical space, where he can look to invest the funds from HDFC Bank and UPL.
Well, I'll probably pick up different sectors. I think if that's not the restrictions, then I believe one large cap and one mid cap name. I think I'll probably put it that way. What I would suggest from current levels, Sun Pharma is what you can look out for at current levels. I think 870, 875 is where the stock is trading right now. I believe the stock seems to be having some decent potential upside from current levels as well. Potentially, I think for say over the next 3 to 4 weeks or slightly more than that, the stock can rally up to almost 950, 975 levels as well. And KEC International is the other stock which I believe looks extremely strong. After yesterday's move, the stock has definitely opened up strong potential upside for itself. So strong volumes which were clocked yesterday on KEC International on the daily charts. The volumes were at a multi-year, in fact at an all-time high levels for the stock. That itself tells you the level of participation the stock has gotten to yesterday. So would suggest alternatives as these 2 names.
Okay, so keeping an eye on those 2 stocks, Mr. Ghosh, but let's move on to the next one, and we have The query coming in from Nino. Rajesh, this one is from you. This is Ganesha Ecosphere is the stock that they are looking at. Should they continue to hold this one? Their buy price is at around 600 rupees and they have a long-term holding period.
Yeah, I don't think that it makes any sense for taking a long-term view on these kind of stocks because they move in, I would say, cyclical way, or sometimes they move, sometimes go for a long correction, and the numbers are not that good to support this kind of pricing. So it's better to exit at higher levels, so you can switch to some better quality names like HDFC, ICICI Bank, or ITC, Reliance, this kind of stocks.
Next query is coming in from Bhagwan Bablani. He's writing to us from Mumbai and he's saying that he's bought Make Money Organics 200 shares at a price of 144 rupees per share. He wants to know what should he do with this particular account, Kunal?
So I would suggest to hold on to the stock. It's almost at 131, 32 levels currently. The stock is getting into a bit of a sideways patch for itself. It's been one of the few stocks which have done reasonably well over the last 1 to 2 years. So I would expect that if you've bought at slight higher levels than the current market price, you still have a possibility of getting break even to in the profit zone over the near term. So I would suggest a hold.
Okay. The next query we have is on Adani Green. Rajesh, Maleshwar has got Adani Green at 2,101 rupees. Should they continue to hold Adani Green Energy or should they be looking to exit this one?
See, if I talk of purely valuation parameters, the valuation looks overstretched, no doubt on that. There are a huge lot of debts also. So it's better to switch to some other companies if your risk appetite is not that high. In power sector, you have better names like Tata Power or a CESC where you can have better valuation, I would say, rather than when you compare to Adani Green.
All right. This next query that I have is coming in from Kiruba, writing to us from Chennai, and he wants to know whether it is a good time to buy ICICI Securities at current level for the longer term. What do you think, Kunal?
Well, I think from a longer term you can look to buy, but I would not be very excited to buy the stock because I think ICICI Securities has been one of the few stocks which has dragged which has dragged a lot. So the rallies have been very short-lived. The corrections have been more prolonged for the stock price, and that's not a comfortable sign when you're looking at the charts or trying to time the stock. So if you supposedly buy at the wrong end of the price curve, then you tend to have a lot of waiting time for the stock price. So you can look to buy. The price has come back to an attractive point, but the only question is how prolonged the consolidation of the correction could be. That's the only question mark for ICICI Securities as a chart perspective. So I think I would probably leave the decision to you. If you're looking to hold on for say 6 months to 1 year kind of a time frame, then it makes sense to probably buy the stock at current levels.
Okay, Kunal, I'm going to come back to you and moving to Varun Beverages. Now, Omkar has a query on this one, that is it a good time to buy Varun Beverages for a short-term to medium-term time frame?
Well, I would suggest to avoid now. I understand that the stock has been hitting new highs for itself, but then you have to understand that risk-reward typically goes out of favor when you try and enter the stocks which are riding on high momentum, week, 52-week highs, multi-year highs for themselves. It's always prudent to try and time the stocks when they enter into a corrective phase and when they come back to some strong support for themselves. So I would not suggest a buy at current levels, but if the stock gets into a corrective phase, say at least a 10% correction from current levels, that could probably bring out some good risk reward or good probabilities where you can make some good money, at least from a short to medium term play, not at current levels.
Okay, this one is coming in from Akshay and he's writing to us from Dubai. He's saying that he has 100 shares of Campus Activewear purchased at 380 rupees per share. He wants to know whether he should continue to hold on to it or stay or exit the counter, and if exit, instead look to add Relaxo. What's your take on this one? Rajesh? Since Campus Activewear is a very recently listed counter, I won't ask this to Kunal. But do you track this one, and does it make sense to hold on to it? And if you suggest exit, do you think Relaxo would be a better bet?
See, if I have to choose between both of them, I think Campus is in a better position because of valuation. Relaxo has got a stretched valuation, I would say. Although both the companies are good, but at this point of time, continuing with Campus would be a better choice.
Okay. Kunal, the next query, this one is by Mr. Gupta coming in on Godrej Properties 1320 call option. Is it a good time to look at this one and buy this one?
So I think the strikes which you have selected is quite okay. The stock is on the verge of a breakout, but Godrej Properties somehow has gotten to a downward trend over the last 5-6 months. I think if I'm not wrong, it was one of the first real estate stocks to start topping out and then getting into a corrective phase, followed by the others. So on the way up, I'm not sure whether the stock would be the first one to try and bottom out and then start into a rally phase for itself. And even if you look at the last 1 week or 2 weeks of chart patterns, it's been a very slow, gradual rise for Godrej Properties. So I would suggest that it's not a suitable stock to try and look out for an option trading. I would suggest an avoid in that regards.
Okay, one more question coming your way, Kunal, and this one is coming from Jyoti Ghai. She's writing to us from Bangalore. 3,000 shares of Rain Industries purchased at 200 rupees per share. Wants to know whether she should exit or hold on to the shares.
Well, I would suggest to exit, not at current levels, but again, as I said earlier, that if you can probably expect some sort of a bounce into the stock price, maybe till 155, 160 levels, a 10%, 12% rise from current zone, that could be a good point where you can look to exit.
Rajesh, we have the next query coming in on Sterilite Technology. Now, Rajiv is a long-term investor holding Sterilite Technologies, 300 shares at 195 rupees per share. Is it worth holding this one, or should they be switching to any better stock?
It would be taking a very long time to give some suitable returns, I would say, although it's on a very good sector, optical fibers, which is going to be in great demand once FIG and all is launched. But it would take some time, maybe 9 months, 12 months down the line. If you're having that kind of time, you can very well carry on with that stock. Otherwise, I would say switch to some auto ancillary names like LG Weathers or GNA XL, FIM Industries. These kind of stocks looks to be on a better footing than Sterilite Technology in the mid-cap space.
Okay, this one is coming from Vijay. He's writing to us from Chennai. He's saying that he's holding 80 shares of Wipro, purchased at 466 rupees per share. He wants to know whether he can accumulate some more at current market price. He's a long-term investor. So his rationale is considering the rupee is going down against the dollar, inflation in the United States. There is concerns on the IT stocks performance for the next 1 to 2 years. So what should he do with Wipro? And if there is any other IT stock recommendation that he can look at right now. Kunal, what's your take on Wipro? And if he has to look at any other IT company, would that be TCS?
So I would probably prefer TCS as well as Infosys. They are much more stronger and better bets. These stocks have managed to do pretty well for themselves over a longer term period. But then I think a better strategy would be a buy on dips. You can start at current levels of 3,000 approximately for TCS, but then keep some powder dry in case if the stock corrects towards 2,700, 2,750 mark, which I believe is a strong likelihood over the next 3 to 6 months for TCS. Wipro, on the other hand, I would still have a bit of a doubt over here, because the stock has not been strong in terms of the counter rallies for itself. So for example, Infosys had a rally of 10% in the last 1 month from 1400 levels to almost 15, 20, 30 for itself. TCS had a good rally of almost 200 to 50 points from its previous lows of 3000. But Wipro, on the other hand, has had a very shallow kind of a bounce. So I think the selling is not over for Wipro, and that's why I would probably suggest a wait and watch on the stock.
Okay. Rajesh, the next query we have is coming in on Voltas. Now, Bharat is holding Voltas at 963 rupees per share. Can they add more at the current market price? They have a very long-term hold period, 8 to 10 years is what they're willing to hold for. So what's your view on Voltas?
One can hold and one can buy on dips. The company is on a strong footing with a kind of heat wave going on across the country in the last 2-3 months. I think the numbers are going to be good this quarter also. And for a long-term horizon also, every bit dips is a good buying opportunity in Voltas. One can continue for a long-term horizon.
All right, this one is coming from Samir, and Samir is tuned in from Jammu, and his question is that he wants to invest in Kaveri Seeds. Time horizon is 1 year. Do you think it makes sense, Kunal, and at what levels can he enter this counter?
I would suggest to avoid the stock, frankly, because I've tracked the stock over the last 3 to 4 years. It doesn't get into any kind of a major breakout mode. You look at the last, I think 2016, 15, 16 price levels for Kaveri Seeds. It was almost at 450, 475 levels. Currently, also the stock is at 489, and between these two timeframes as well, the stock had not done much, significantly. So I would suggest to avoid Kaveri Seeds, even at current levels, and even if the stock has come back towards a key support point.
The next query, Rajesh, we have is coming in on Patanjali Foods. We have Domadia, who's Hiren, who's holding Patanjali Foods at 1,171. Should they hold or sell the stock? What is the view coming in on this one?
So it's an exit on all given opportunities. Any upside, any upticks should be taken an opportunity to exit. The numbers are not that supporting. There are better bets in FMCG. ITC is one of the cheapest in the FMCG space, I would say. If you're not, then one can look at either Marico or Dabur rather than going for Patanjali Foods. So every opportunity should be taken, every upside should be taken as an opportunity to exit in this.
All right. This next query is coming in from Tushar, and Tushar wants to know whether it makes sense to invest in Vadalal Industries. Do you think it's a good bet to invest in, Kunal?
Well, apparently Vadalal Industries has done exceptionally well on a long-term basis. I think if I'm not wrong, this is the sixth consecutive month where the stock has actually clocked positive returns for itself. So it's done reasonably well for itself over the last start of 2022 specifically. Now again, difficult to try and time the stock at current levels because of the last 6 months of strong price uptake. The trend is quite strong, but possibly the entry point may not be very favorable for the stock price. So you can look to buy, but not at current levels. I would suggest to buy on correction phases.
Kunal, I'm going to come back to you. We have the next query, which is on NMDC. This query is coming in from Shiva. Wants to know if they can buy NMDC for a 2-year period since they've corrected. So what is the level that they should be looking to buy this one?
See, typically a commodity stock, it tends to correct somewhere around 60% to 70% on a broader basis, even the sharpest phase of the market corrections. Now for NMDC, the stock was almost at 213-14 levels in 2020-21 in terms of the high. The stock is now back around that 100-odd mark, so which means a correction of almost 50-55% is done for the stock price. So possibly another 5% to 10% correction could be in line. So if you can withstand that, say over the next couple of months, and if you still want to hold on to the stock price, then I think it makes sense to buy NMDC at current levels.
Okay, Rajesh, this one is for you, and this one is coming from Arvind. He's writing to us from Kolkata, and he's saying that he's bought about 1,500 shares of Oil India at a price of 275 rupees per share. He wants to know what will be the future of the stock. Should I hold on to it for a miracle, or should I book my losses, is what he's asking, Rajesh.
As far as miracle is concerned, I think we have already seen a miracle in stocks like ONGC and Oil India in the last 6 months or so on the back of boiling crude prices. And I think once crude starts correcting, these stocks will correct simultaneously. So one needs to be carefully track crude oil prices. And if you're on a profit and holding such large quantity, I would say book partial profit and try to exit in higher levels, move to some other better names. Maybe Reliance in the same sector would be a better name to be in.
Okay, and now we will start with the rapid fire. And gentlemen, you all know what you all have to do. Let me start with it. And Kunal, Hemanta is asking RCF, he's bought it at around 100 rupees per share. What should they be doing with this one?
I would suggest to hold on, possibly near 70-75 range is where you can look to add further.
All right, Rajesh, RK wants to invest in 2 pharmaceutical companies for the next 1 year. Sun Pharma, Dr. Reddy's, Laurus Labs, which one should he pick?
I would say Cipla and Laurus would be a better bet.
Okay. We have a query on MTAR Tech. Ganesh is holding 100 shares at 1,230 rupees per share. Should they continue to hold or sell? Kunal.
So I would suggest to hold on. I think the stock has gone to an excessive correction in the last 5-6 months. There should be a decent bounce, and you've bought at the current market price. So good risk reward for you. I would suggest to hold.
All right, so Ruchi Soya 100 shares purchased at 1,157 rupees per share by Bhuvaneshwari. Time frame is 2 years. Should I hold or sell is what she's asking. What's your take on this one, Kunal?
I would suggest an exit.
Okay. We have Prema asking a query on Biocon or granules, which is a better bet for the long-term view, Rajesh?
Biocon, any day would be a better bet. They have good portfolio and the valuations are attractive.
We did talk about Relaxo, Campus Activewear and Relaxo a while back, Rajesh, but this is purely for Relaxo. Mayank has shares at 1,300 rupees per share. He's wondering whether he should continue to hold on to it or sell. He's a long-term investor.
If it's purely relaxo, I would say continue to hold.
Kunal, we have the next query coming in for you, and this is on PB Fintech. Should they continue to hold or sell? This query is from Manjunath.
I would suggest an exit.
Okay, this one is coming in from Rajiv. Bajaj Consumer, purchase price is 198 rupees per share. Buy some more or exit. What's your take, Kunal?
I would suggest to hold on and possibly look to add further.
The next query we have is coming in from Jay Krishnan, who's from Kerala, holding Tata Elxsis at 7,600 rupees per share. Should they continue to hold, sell or average this one? Rajesh?
Add. This is a add. The numbers have been very good. The company is doing very well. One can add.
All right, and with that we come to the end of the rapid fire as well as the query segment. Thank you so much, Kunal, as well as Rajesh, for joining us on the show and addressing all the queries. And to our viewers, if your query is not answered today, don't be disheartened. We will be back tomorrow. We'll try to take as many queries as possible. But for now, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned, more news and updates on the other side. Don't go anywhere.
Is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It's very